Hello, everyone, and welcome to another Options Animal Weekly. And today I'm joined by Horace. Hey, Horace, how you doing?
I'm well, Sharon. Thanks. Good to hear from you.
And we have a special guest. We have Jody coming back. Hey, Jody, how you doing?
I'm good. I'm so happy to be here today. This is a very, very special treat to be able to do this show and be back with our OA community.
Awesome. I'm really glad to have you back. And of course, what a historic beginning to the year. Before we get into all of that, let me remind everyone that the content in this presentation should not be considered as a recommendation to buy or sell a security. All information is intended for educational purposes only, and it should be considered investment advice. Options involve risk and are not suitable for all investors. All rights and obligations of options instruments should be fully understood by you, individual investors, before getting into any trade. All right, so here's where we stand. This is just the third week of the year, and we are already up 5 and 6% on the Dow, the Nasdaq, and the S&P, up another more or less 1% across the board this week. The Russell had a really good day today. Jody, we haven't talked to you in a while. What do you think about this phenomenal beginning to this year, compared to, for example, how we began 2016?
Well, when you see a rise like this, it always gives you pause. And of course, I'm cautious about whether we can maintain it. I doubt that we can maintain this pace. But I think that there's a lot there are a lot of tailwinds for this market. If you look just at PE, it can be misleading. I know there's been a lot of discussions out there recently about how the PE of the market in general is high, but these are not. The PEs are misleading right now. A lot of this, there are a lot of companies, for example, taking tax hits that are going to reduce PEs. And we've got a lot of companies talking about acceleration of expectations, and none of that is going to show up in PEs. So, for me, I don't think that this is I don't think this is euphoria. I mean, people may be happy, but I don't think this is unwarranted euphoria. I think that what we're seeing is a rational response to really increased growth potential. So I'm bullish.
All right, that's no doubt about that at all. No ambiguity in
No.
your statement there.
Look, I know we'll get into it more. There are absolutely things to look out for. I'm not negating any of the potential pitfalls. They're definitely out there. It's too easy to get gloomy when we're high, and then you can trick yourself into missing more of the run. That's all.
That's a good point. Fair point. Horace, what about you? Are you surprised with the rise in the markets? Do you think this continues for some time?
Well, first, that's a great analysis, Jody. I really think that's right on the mark. I think, and I am surprised. I did not expect this type of a beginning, but I changed my mind quickly. So we can't keep this torrid pace. Monday, was it Monday? No, Tuesday. Which day was it that we had that kind of down day? We opened high and then fell about 250 points during the course of the day. And what I was hoping to see this week is a slowing of the rise. I mean, I would really like to see this market level out a little bit, let people catch their breath, and then continue higher. But I agree. I don't see any reason to be pessimistic. There is a slight change in trend. I think the way people are there's not quite as much reticence to believe that we're going higher, but I still don't see any euphoria. So I think this could go, and even that phase of a bull market can last a long time. And if we are indeed entering that, it can last months. So yeah, I'm bullish going forward as well. But I continually keep hedged because you do never really know. But trying to fight this trend right now is a losing game, I think.
I think I agree with both of you. I mean, all of this last year, we could pick any random OA weekly and you could probably hear some concern, but cautious optimism. And the fact is that the economy has continued to get better, not only here, but overseas as well. and earnings, the lifeblood of the market, are looking pretty strong. Energy was dominant last year. Looks like it's going to be dominant again this year. So, any impact? Do you think the markets care if the government shuts down? I read some articles talking about how there's not going to be a long-term impact even if this happens. We obviously lived through shutdowns not that long ago. What do you think about that, Jody? Can we just dismiss this and move on to earnings?
I think so. Look, even if the deadline tonight is passed, we are not going to be in danger of missing any kind of payments, of any kind of consequence until, about sometime in March, probably. And I can't imagine even the government as it is now is not dysfunctional enough to let that happen. So I think this is brinksmanship, and it will get resolved, if not tonight, very shortly. And the market is shrugging it off. I think we should too.
All right. Well, that's I think my position as well. What do you think, Horace? Do you have a differing opinion on this?
No, I don't actually. I think that's right. And throughout the day today, there was news back and forth. Were they going to shut down? Were they not? Are they going to pass? And the market didn't seem to respond either way. And actually, I saw a study where if you look, I think it's 6 weeks out after a market shutdown, the Dow is up 100% of the time. So it doesn't have a lot of impact. We seem to do better when they, so I think people are shrugging it off. It's like so much else of the news. We're just accustomed to this dysfunction, this worry, that we ignore it. And as Jody says, I don't see a material impact of a government shutdown this weekend if we get to that. And nobody wins if that happens. So I don't think we get there.
All right, moving on then. Earnings, right? So this is something I got from briefing.com. It was the big picture story last week. I was not on the OA Weekly last week, but I want to talk about this, that obviously this earnings, it's just begun, and so far so good. So Goldman Sachs was, showed a surprise loss of almost $2 billion, and they've been laying off their options desk, people at their derivatives desks, because just lack of volatility, they're just not making enough money. I think that's a short-term problem. But earnings are expected to increase 10.5% year over year, which is down from a little bit. And usually, and that's a pretty big number. So usually when I look at, what are the expectations getting into a quarter, that seems like a little bit of a higher bar. And so I'm a little bit worried, not really, but like tax reform and tax cuts and M&A that's likely to follow, the earnings growth that is happening, energy sector again doing quite well in terms of growth, not as heady as last year's because they were giving some very easy comps. But isn't this what the market really cares about? Do you think there's any, Jody, I'll start with you. Do you think there's any hidden problem in here? Maybe the bar is a little higher this time around and we don't quite get, because look, tax reform, for example, stocks like General Electric, they're going to get hurt by tax reform. They had been paying no taxes pretty much, so they have to pay more. What do you think? Is this going to be a potential catalyst for the market to come back down a bit?
I don't think it's the earnings bar that's the potential catalyst. For me, the potential catalyst is potential for inflation, the Fed, and I don't want to say crash, but a large decline in the bond market. That, I think, is a potential catalyst for a pullback. We still have the issue now where there's really nowhere else to put money but stocks. If those things change, if bond yields start to come up, there will be other places to put money, and the expected return that people will want from stocks will be higher. So I do see that as a potential problem. As far as earnings, things like GE, they're not going to benefit, but they're also not being bid up. I think the market is pretty discerning about, knowing where where to put the money. I mean, even the banks, they didn't pull. They had sort of a tepid quarter, or they're having, and they're not pulling back as much as I had hoped. I would hoped they would pull back more so I could get into them. So I think the market is behaving fairly rationally right now.
What do you think, Horace? Do you think optimism is running really high, and maybe the bar is a little high that some companies are going to get knocked down? They've run up a lot as the beginning of the year, but not just beginning of the year, in the end of the last quarter as well.
Yeah, no doubt. I think no. The short answer is no. I don't think the bar is too high. I think that earnings are going to be extremely lumpy because I think the effects of the tax bill are going to, they're not going to be homogenous across all companies. So I think people will be surprised in individual instances, the way that affects a company's bottom line and the way it affects their projections going forward. But even if we do see a pullback because this is maybe too ambitious a goal, I think that'll get bought immediately. I'd love to see stocks pull back 1 or 2% because I think a lot of people would flood back in. So although it may be a short-term blip, Charan, I don't think it's going to change the tenor of the market in any meaningful way. And there are a lot of people like me waiting for opportunities to re-enter some of these things that have run away from us. So I agree with Jody. If there's a catalyst to the downside, I don't think it's going to be this earnings season. Now that, on a stock-by-stock basis, that may be, we may see changes in tone towards stocks given an earnings event. But overall, I don't think that's going to slow this market down considerably.
I think I agree with that because, again, for every quarter of 2018 at the current time, and these projections can change, but we're expecting good growth in the S&P companies for every quarter. So even if there is some weakness that I'm afraid of, that, the bar seems a little higher to me this time around, I think you're right. I guess like everyone else, I'm just waiting for an opportunity to get into things a little bit cheaper. And as we've all been experiencing this, and Apple used to be like that, where you keep waiting for it to come down, and it just keeps going higher. So, all right. And then how about commodities? So I saw this. Jeffrey Gundlach of DoubleLine made a presentation last week. I got some of the slides out of Barron's. He thinks that commodities are poised for a rally, that it's just getting started, that commodities really did not participate. As you can see here, this is a basket of commodities. And we are starting to see things at 2-year or 3-year highs like copper, but that's like 2-3 years back is just here. So it caught my interest to go look in for some commodity-related companies that maybe for one reason or another, maybe they're in the middle of a transformation or some repair work. There may be some gems. Do either of you guys follow anything in this space? And I have some commodity exposure, but not a lot, but this certainly got my interest. Jody, how about you?
I really don't. I'm actually surprised that they're not up more than they are, considering this sort of global optimism and how much energy prices have rallied. It seems like a great area to look into, but I don't have a lot of expertise there.
Yeah, I used to do some work in this sector. Some companies I'm familiar with. But they've changed, like Freeport is completely different than it used to be. How about you, Horace? Are you looking in this sector? Do you have some experience with this? I think, Jody, part of why the stock, that chart looks weird compared to the rest of the market is the strength of their dollar. So 2014 dollar took off and commodities were sold off harsh. So, sorry, Horace.
Yeah, and I was going to say, I think that's as much a part of this story as anything else, is a continued weak dollar. But if you, and no is the short answer, I don't do a lot of trading in commodities, but if you look at the charts of Freeport-McMoRan, FCX, or Alcoa, off the top of my head, they were incredibly bullish going into the end of the year. But I don't do a study of them. It's an interesting idea, though. As you say, there's a long way to go if we get back to prior levels. Of course, that would assume continued growth in China and India and the consumers of this stuff, which would be bullish, overall. So
I mean,
Yeah.
that part of the world does look good. I mean, China, I don't know if they manipulate the numbers or not, but last quarter they had 6.8 GDP. Again, they had 6.8 GDP this week. So, I mean, India's doing quite well. There may be something more to this. I'm going to certainly investigate this for 2018 because I tend to think that stocks in this space tend to be a little bit more volatile, obviously, and if they have decent options, they could be good for dynamic collars types of trades. Anyway, so looks like that's going to be my pet peeve for 2018. All right, so this is something also from the Gundlach presentation where he thinks that one of the things is a potential risk is, Jody, you mentioned interest rates moving up, and by the way, they finished up. I was pulling this up. It was a little bit too slow to load. But this is the 10-year U.S. Treasury and finished at 2.65 today. And I mean, just at the beginning of the year, we were at 2.4. So we have stocks moving up. We have yields moving up. At the same time, we have this happening, which is that the Federal Reserve and the European Central Bank, the Fed is obviously been cutting back, and the ECB purchases are going to slow down. And slow down further, we think, later in the year. And so this, he thinks, is a potential threat to the market. And he thinks that the S&P is going to finish down for the year, that stocks are rising and people are trying to make as much money as they can right now. But we have this threat of what Jody said, if this thing ratchets its up, I mean, it's up a lot. 2.4 to 2.6 is a big move in 3 weeks. And so if that continues anything close to this pace, we're going to be at 2.85, 3, presumably in a few months or weeks. I think that is a huge threat. And we'll talk about inflation later, but we all watch the Fed and other central banks. Is Jeffrey Gundlach making too much deal out of this, or the market will in fact wake up to the reality that the easy money is really behind us? What do you think, Horace?
He's been saying that for years. I mean, he's
true.
he's clearly much smarter than I am, and he's got a lot more money, and people listen to him, but he's been wrong. So I don't know, but I wouldn't take his word on it. The whole notion that this entire rally has been kind of a sugar high from easy money, maybe that's true, but now it looks like we have the fundamentals coming on to keep us propped up when we remove the stimulus that the governments have been pouring into our economy. So I don't know how that all washes out, but this isn't the first time Gundlach has called for a lower market. And I think in that presentation, he said that first we're going to go much higher and then we're going to fall. And
first half up and second half down.
I think that may happen, but I think it may happen for different reasons than him. I think we can talk about that. I think the midterm elections are going to cause some rethinking about policy in the markets. So I don't know if he's right or not, but I'm tired of listening to these gurus tell us that this is the end. The easy money's been made, because clearly they've been saying that for 6 years. One day they'll be right, but I don't necessarily know if that's today.
Yeah, and I recognize he said, 6 months ago, sell everything, go to stock, and cash and gold.
Yeah.
So, and obviously, look, if there is any weakness perceived in the economy or inflation threats and so on, the Fed will probably not act the way it's being predicted here. Did you want to add anything to this, Jody?
I agree, actually, completely.
Nope, we lost you there.
Here, how about now?
Oh, you're back.
Am I back? Okay.
Yep.
I think that the bond prices are an issue. There's so much else in the market propping it up. I mean, we haven't even talked about buybacks and the effect of all this cash that's coming in, and the kind of shortage of stock that's out there. But I do worry a little bit. I mean, China's been making noises about cutting back on purchases of U.S. bonds, and if our deficit starts to run up, we might not look as attractive. I think it's something to watch. But look, I think it's never a good idea to try to pick the top. everything is flashing bullish. The charts are flashing bullish. If things start to turn around, there'll be time to take protective actions. It doesn't have to, I wouldn't try to step ahead of it.
I think that's good advice because, even in that presentation, most of it, he talked about how, well, this could happen, but I mean, everything slide by slide, what's happening in the economy is actually pretty good. All right, so the S&P continues overbought and continues to make new highs, 2,800 at the end of this week. And so does the Dow Industrial Average. Dow Jones now above 26,000, as you know, and of course being overbought relentlessly this is a huge, I can't remember the last time this happened. So the NASDAQ similarly also very overbought, and the biggest gainer last year, again, the biggest gainer so far, people chasing growth. All right, so Russell had a very good day. Small caps obviously have been, along with the NASDAQ, big beneficiaries of making most of their money in the US and tax cuts and all of that stuff. But transports confirming the major indices breaking out. Many of the transport companies doing quite well, and holiday season was pretty good for some of the delivery companies, and they executed well. And again, we're back to no fear. Every time we get near this in the last 90 days or so, 12, 13, even the low teens aggressively getting sold off. People not worried about government shutdown, clearly. I mean, the VIX coming down big time today, and probably will continue to, especially if there's a deal or a postponement sometime between now and midnight East Coast time, I guess. So any of you care to make any comments about any of the major indices or the volatility that we are seeing at the moment, Jody?
No, it makes it hard to trade. Not just for us. I think that was pretty clear in most of the banks that reported that their revenue on that side was fairly low this quarter because there's no volatility, and it's hard for traders to make money. It's great for people who are sitting in the market and riding the wave, but a lot of trading is hard when it's this low.
Yeah, and we were talking about this just before the show. Goldman Sachs last year even laid off people in their derivatives trading. There's just not enough volatility to make money, and Goldman Sachs posted a loss in this quarter, almost $2 billion. I think it was $1.9 billion, and it's probably a one-time thing, but yep.
Yeah, I think if you take out a lot of them took a major tax hit because of the tax code. I think if you exclude that, it was not a loss. But even so, they definitely, the trading volume has gone down a lot.
Yeah, and we did see a bit of a spike in the VIX, or not a spike, but a gradual rise. But that's not too surprising. We have been seeing more intraday swings of larger magnitudes in the last few days. So you would expect a VIX. And I always get comforted by a rising VIX. It means people are putting on protection, is the way I look at it. And so I'd rather have people with some hedges going forward than everyone going in simply long. So I don't think it's necessarily a bad thing. It does change the way you have to trade. I think Jody's absolutely right. Credit spreads in a VIX environment like this don't make a lot of sense. The risk doesn't change, it actually increases. So yeah, it's been a difficult, I certainly have changed the way I've traded in the last 3 or 4 months just based on this persistently low VIX.
Yeah, and this is exactly what Barron's talked about, I think, a week ago, that the smart money is going into 2018 hedging its best bets, and that there's still some skew towards puts. Again, it may or may not pan out for those people who are buying those puts, but there certainly has been buying at the beginning of the year, and that's why I think the VIX clearly went up. I was a little bit surprised though that it came down the way it did today. I'm not sure what to make of it, but we'll find out maybe next week. Maybe somebody knows there's a deal afoot. All right. So stocks in the news and earnings this week. I just thought I'll pull up individual names. So for me, obviously earnings season is just getting underway, and I'll just highlight Alcoa. one of my stocks that had earnings this week, and it had a bad reaction. But this is one of the, aluminum prices have been going a little sideways here recently, and the stock has been up like a monster. And I mostly held the position of a in-the-money covered call through the earnings, so it's down a little, but I'm not sure it'll come down a whole lot more. If it does, that'll be nice, because then I can do some bull puts on it maybe. And then another one for me this week was Schlumberger that had earnings 19th, and of course I was down a little bit in the morning when it opened, but because the earnings were this morning. And given the amazing rise this stock had, and I got caught up in short calls, so I was really curious to see if Schlumberger this week with earnings will maybe come down some. And I was a little bit encouraged in the morning. I had 75 short calls, no puts for earnings, and it didn't. So it reversed right back up to. I don't think this is a cheap stock, by the way. In case you're wondering if this is a good place to enter, it might be. I mean, they're probably going to have a benefit of tailwinds going into 2018, given how natural gas and oil prices have been doing. But I don't think this is a particularly cheap stock at these prices. But those are two this week that had earnings that I care about. So let me ask you, Jody, any stocks in the news this week or something you trade or invest in?
Well, other than the ones I'm saving for my stocks to watch, I think what's been going on in GE is really fascinating, because to watch the deterioration of a company that was once, the bulwark, right? GE, you could almost, I remember when I started investing, you'd say, well, you don't even have to buy a mutual fund, just buy GE. And it's just never quite been able to get its footing since the housing collapse, really. And I find that sort of a cautionary tale when people start to say things like, well, that company will never be destroyed, right? That company will stand forever. There is no such thing. I mean, now they're really talking about breaking it up completely. So I think we can, when we're talking an individual stock, and I don't care what stock it is, Disney, Facebook, things you love, they can change, and you have to not get fooled by a name.
How about you, Horace? Any particular earnings this week that you are watching or care about?
Well, I didn't have any holdings with earnings, but I did take a look. I did put on some trades after earnings. One of them was on IBM today. So I did a brief look at, this is, you talk about hard luck, right? This is the first quarter in 22 quarters with increasing revenue, and the market kind of just slaps them in the face and sells them off because they didn't do well enough in the cloud. So it looked to me like potentially a bit of an overreaction. So I put on a bullish call calendar, basically, with the anticipation that this will climb back up because it's a cheap trade right now. So that was one that I'll be watching in the coming week. Another trade I put on this week was on Citigroup. I thought those were bank earnings are a mystery to me, and they are, I think, to most people, because they can make them look like whatever you want. So I look at the market reaction, looked good to me. So I put on one of these kind of cheap butterfly type trades up a few dollars out of the money, and with the hopes that CE, and literally it is the hope trade that CE, that Citi will rise in the coming month. And I think there's certainly had a good day today. So those were the only two I paid a lot of attention. There's one other company I trade, Kinder Morgan. I actually exited my trade prior to earnings because it was profitable and I didn't want to carry it over. But the same thesis I had for this company, and this will be one of the stocks to watch, and that is an increase in their dividend, a substantial increase in their dividend. They reiterated that during their earnings call. So I would anticipate putting on a trade again on Kinder Morgan once this kind of finds a bottom. And looking at that chart, maybe it's going to settle down in the next couple of days. So no, I didn't have a lot of earnings.
Yeah, well, it's just getting started. Sorry, Jody, you wanted to say something?
Yeah, you know what? Can you put up one more? Can you put up Kodak? I think.
Yes.
Oh God.
KODK, I think.
You mean the blockchain company?
Well, I was actually, I mean, and they're still, look how high they still are. So for, if anyone, you haven't been watching that story, basically they announced they're going to be creating Kodak Coin, their own currency, because to deal with digital rights, because, we couldn't possibly pay for photographs with regular cash. And apparently they also invented some sort of Bitcoin miner. And, if this is not the perfect textbook example of a crazy bubble, I don't know what is. So this is one we can just watch. I mean, I'd almost like to find a way to trade this to the downside, but the options are just, out of,
So
they're not,
yeah, no, that's really funny. I did a class today on kind of a haphazard one on how probability analysis doesn't work. And if you take a look at how many standard deviation move that was in Kodak, and then tell me that you want to price options on a bell curve, go for it. Because that is literally not supposed to happen. So yeah, good example.
Yeah, there were other stocks in the news this week that had huge moves. I mean, Juno was up 50% in a day. Anyway, so yeah, blockchain, that's kind of crazy because Overstock and all of these stocks that are anything with, it's like the late 90s, right? You put your .com in your name or something to do with the internet and suddenly you have a much higher valuation. All right, moving on to economic events. By the way, before we move on to this, anything next week you guys are watching in terms of earnings? Any particular stocks that you
I think Netflix is next week.
Netflix is Monday.
Yeah,
I believe. So yeah, I'll be watching that because
definitely be watching Netflix.
That's always fun. And I don't know. Let me see what else there is. I haven't done my due diligence for next week yet, so I'm a little offhand. How about you, Sharon?
But GE is next week. We were talking about that.
Oh, GE. Yeah.
And J&J, Johnson & Johnson, I think, is also next week, which is a stock I often watch and trade.
Yeah.
All right. Yeah, everything is just rocket ship up at the beginning of the year here. All right. So next week, economic events, or this week's economic events first, of course. So Empire Manufacturing, it's still a little bit weaker, but not too weak.
Sharon?
To me, here's what's. Sorry.
Did we lose Sharon, or is it just me?
Just you, Jody.
What happened? Okay. So to me, first of all, crude oil inventories, big drawdown, that stood out. And why are rig counts going down? Isn't that somebody wondering, like 6 months now, rig counts have not risen, even though oil has been going up. I'll talk about it maybe a little bit later, but there's an explanation. It kind of feels like the U.S. shale producers joined the cartel. They're like, well, let's focus on making money and not just kill each other, rising with increasing production. Rig count has been kind of weird to me this year since the summer. But that the drawdown in inventories definitely stood out. The housing numbers. Permits were a little bit better, starts were a little bit weaker, somewhat impacted by weather related phenomena. Obviously, where I am, it's in the 50s. It's crazy. It should be like 10, but the East Coast obviously getting the brunt of it, and that's where a lot of the intensity of housing is as well. And then Michigan, I mean, I think that's a third month it's come in weaker, so I'm not particularly concerned about it, but it certainly caught my interest. How about you, Horace? What you see this week?
Yeah, I agree with what you're talking about. I think if any of those numbers come in surprisingly hot, we'll start talking about the potential for inflation. So I'm fine with them being a little weak. Maybe sentiment is cooling off a little bit. Can't go much higher than 98.5, can it? So yeah, and the Philly Fed, those are fairly, and Empire Manufacturing are fairly lumpy, but still positive. So it's all kind of status quo. I haven't seen an economic report that's made me sit up and pay attention in a long time. It seems to be going along at a good clip.
Well, coming back to that mining theme and commodities, I thought that perked up to me, and because I'm maybe thinking about commodities and winter weather we talked about on the housing starts. I did notice this. I don't know if you care or make a lot of it, but like inflation, Jody, this is like one of my main themes that I think inflation is a huge threat, and the inflation type component within the Philly Fed did rise a lot. So was that a concern to you or anything else in this week's news?
Well, I was a little bit surprised by the weaker housing starts, but I think it really is weather because last week's housing numbers were good. But yeah, I am not worried about inflation. A certain amount of inflation is all right, but I see it. I mean, there is inflation. Even if you just look, I mean, Amazon is raising their Amazon Prime. I mean, their companies are raising prices. I think it's going to show up very soon. I think we just need to be ready for it.
Right. I mean, Walmart raised their minimum wage, and you're right. I mean, inflation it feels like this will be the year where it starts to make an appearance. Anyway, so I look for, some of the early signs of that, and that stood out a little bit to me in the Philly Fed this week. Internationally, we had Great Britain CPI year over year actual 3% in line with forecast. And probably the biggest number I was watching for is there's going to be a surprise in China GDP, came in at 6.8, a little bit better than forecast. How did they come out with exactly the same percentage number quarter after quarter? That's
it's good management.
It's good management.
Good management. There you go.
All right. So for next week, we have a little bit of a light week here, and internationally, there's some pieces of news that are coming out so I'm watching the existing home sales and new home sales data. It might probably will be impacted by weather on the East Coast. Crude inventories, I mean, that was a huge drawdown this week, 7 million. So we'll see if there's a continuation of that. I think the big number next week, of course, is going to be GDP advanced numbers for the fourth quarter. We just ended 3 weeks ago, and looks like we're going to finish the year strong. Expectations for about a 3%, roughly 3% growth. And then we have durable orders, which, LEI is a very important one. Jeffrey Gundlach actually had a slide about this. I mean, leading indicator is something that I watch to see if there's any, it's leading. So you're like peering into the future 6 months down the road to see if there's any sign of a slowdown. And leading economic indicators it's been phenomenal, kind of confirming and giving some confidence that this market is on good footing. Jody, anything in particular you're watching this week for economic events?
GDP.
Anything in the home
Yeah,
sale?
no, I mean, really, other than GDP, there's not anything I'm going to be paying that much attention to unless existing home sales, existing and new home sales really comes out with a shocking number. I mean, December is not when you shop for a home anyway. You know, it's just not, it's not the right season to be looking at that.
Yeah, I would agree with that. I don't see a whole lot there that, other than the leading indicators in GDP, that would make me sit up and pay more attention.
In the coming months, I'll be interested to see what happens with home sales in these sort of high tax states, because there's been all this prediction of doom and gloom that it's going to kill the housing market in New York, and I don't think it's going to happen. I think that it's just not. I think that people who can afford the $2 million home are not going to be dissuaded because they're paying a few $1,000s more on taxes. But I will see. I think that's going to be kind of interesting to watch.
I'm not moving.
Well, look, nobody's buying homes here unless they have to be here. At least not in my area. You buy them here because it's near the city and it's where your job is. So I don't think it's going to make any dent, but we'll see.
Well, I have one friend who owns a small food company who is actually moving to Florida. He's going to live there 6 months and a day. And part of the reason is taxes. We live in Massachusetts, it's a high tax state. This isn't going to help. So I think it remains to be seen what it's going to do. I think it has the potential to cause disruptions that people haven't thought through, put it that way. So we'll see. But it only affects the top of the top.
Right.
The rest of us, it doesn't matter where we live. So.
All right. Well, I'm not trading anything in this space directly, but I'll be watching natural gas inventories. They had a huge drawdown. It's on fire in the last 2-3 weeks. I'm not sure I fully understand why, but I intend to look into what's going on here.
It's cold. It's been really cold here, John.
It's a long-term trend. What is it like outside right now?
Here? Today's pretty warm. Today it's about 25 right now. So we're actually done with the real cold weather.
So you're out in shorts now?
No. When I go into my office in the mornings, it's 58 degrees and I turn on the heat. So there's a lot of natural gas getting burned in New England.
That's here too.
All right. Well, overseas, we have the Japanese Bank of Japan rate statement and press conference. That's going to be early in the week. And then we have really nothing major. There's the ECB rate decision. That's 25th. I don't know if it's going to move the markets. Last time there was expectation that it could have, but it really didn't. Currencies, probably, if you trade them or have currency sensitive equities, could probably see some movement on Thursday. And those are the two international events that I'll be watching for this week. And those are the wrong announcements. I just realized I did not grab them. Let me go back in here to the site. While that's loading, by the way, here is that leading economic indicators chart. So this is from that Jeffrey Gundlach presentation. So LEIs leading up to recessions, they turn down. And ours, the red line, is currently still going higher, very strong. We'll see a new piece of data on that next week. And likewise, everything pretty much in here, factory orders, ISM, services, confidence, not a big difference between treasuries and junk bonds. So people are still optimistic about the economy and commodities. Anyway, so I'm going to close that. All right, so announcements. Dana Point, California. I don't know why the A is lowercase. February the 10th. And so please, if you're in the area, come and attend. This is going to be trade school sponsored by E-Trade. You could call us. We could tell you more about it. Obviously, we have the Sacramento one-day summit coming up. Well, that's today. So it's actually almost over at this point. And then we have the San Antonio, Texas. When was the last time we were in Texas, right? So it's been a while. So San Antonio, Texas marks the regular student summit. Horace, are you going to this? I haven't looked. Nobody's asked me yet if I'm going or not. So
I'm planning on attending it. Yeah, I don't think I'm presenting, but I wouldn't miss it. I haven't been to a summit in a little while, so I'm looking forward to this one.
Okay, so far, Greg, Jeff, and Eric.
Yep.
All right. Perfect. Yeah, I've been to a couple of summits where I didn't present, and they're awesome, right? I mean,
yeah,
the energy in the room, the conversations you have. Sorry, go ahead, Jody.
No, I think everyone should try to attend them. And the relationships you form, the connections you make, even just with other students, is worth the trip.
Yeah, absolutely. I think I went to my first summit about a month after I joined. It was out in San Francisco, and it's worth it. It's fantastic content, first of all, but even more, you just get to meet people and put faces to names. Makes a real difference. And the other thing, if you do live in New England, you want to Google average temperature in San Antonio in March, because it's better than what you're getting now. So that's another draw.
There you go. Good point. And finally, in announcements, we have our January Trader Workshop. That's going to be on the 27th of January. That's usually from 10 noon to 4 Eastern time. with about a 15 or 30-minute break in the middle. And usually what we have in the trader workshops are two presenters, and usually one goes first, and then there's a break, and then the other presenter goes. And what we do in these, and they're very popular, I get really good feedback every time I'm on trader workshop, where we talk about how we find positions and do practical application. And so they're a lot of fun. There's a lot of interaction within these trader workshops. Sometimes I cover things that we don't maybe talk about, like trading patterns or some other things, some outside of the curriculum topics that come up in the trader workshop as well. So you guys have both participated in them. Or Horace, have you done one yet? No.
Yes, I did one very early on, well before the time I was ready for it. Yeah, they're a lot of fun. It's a challenge to come up with 2 hours of material, but as a student, I love them because you can learn a lot from these guys in 2 hours, and it's a really open-ended event. So well worth it if you have a chance to joining it.
Did you notice you still said these guys?
I meant it too. It takes a while. Today was the day where I had to come up with original content. That is extremely hard to do.
Was this your first 8.9 class?
Yes, and so whatever. You swing, you do your best. But no, you'll get a lot of content. And Jeff and Eric for 4 hours. I'll probably tune in myself just to hear what they have to say.
Oh, I don't miss those. Those are gold. I learn something all the time, every time.
Yep. All right.
Moving on to the final segment, which is stocks to watch. Who wants to go first? Horace, Jody?
Go ahead, Jody, if you want.
All right. So I'll start with one I know that you've all been talking about already, but it's too good an opportunity, I think, to pass up, and that's Facebook, Foxtrot Bravo. This is a stock that I've been talking about for years, back when the PE was 70, 80, as a great example of how a company can deserve a high PE, and the PE has come down. The forward PE is still excellent. The projected growth is excellent, and this little blip that we've all gotten because they announced this potential change to their advertising is a gift, I think. Now you all go do your own due diligence, but this company is just a juggernaut, and it delivers all the time. And either they know what they're doing with this and it will add value, or they'll change course, right? If whatever they do isn't working, they can course correct. It's not like they have to build 10 different factories to do this plan. So I think this is an opportunity for Facebook, and it hasn't snapped back as fast as I thought it would. So I think the opportunity is still there. Next on my list is Ulta. That is Uniform Lima Tango Alpha. Ulta is going to benefit a lot from tax reform. It pays a pretty high rate now, and its rate is going to come down a great deal. I also think that it's going to benefit from the fact that consumers are going to have more cash, right? They're getting bumps in pay. They're going to get more money in their paycheck starting immediately because of the new tax rates. And I think those two tailwinds are going to really propel this company. It's very well run. It's also, I believe they don't have earnings until March. So sometimes we're in this earnings period and it's hard to trade because you don't want to trade around earnings. So here's one that's going to give you a little bit of run time before you have to worry about their earnings. But they've got strong profit margin. Their profit margins are increasing. I think they're just a very well-run company. And then finally, I am going with Philip Morris, Papa Mike. This is one I have talked about here many times. I really like having some dividend payers in my portfolio, even in times like this where, we're running up high, and the dividend payers, they may get hit if interest rates start to go up. But I think it's a nice little ballast to your portfolio to have some dividend payers. They were upgraded today. That's what that blip is. I forgot who upgraded them. But they are putting a lot of effort into e-cigarettes. I think it's a great move for them. I'm not suggesting that everyone go out and smoke e-cigarettes, but with there is a definite advantage, a health advantage compared to regular cigarettes. I think they're going to benefit greatly from that, and the dividend is still, I think it's slightly over 4%. And those are my three.
Perfect. I wrote this one down because it's doing what I like. It appears it doesn't have any debt and a nice dividend. By the way, Alta, there was a rumor, I think it was on Alta today, somebody looking to buy them. It flashed as a rumor on, I haven't seen it anywhere else.
That.
It popped up in Fly on the Wall, which is
okay.
like a breaking news kind of service, and in the rumors it popped up today. I think it was on Alta, and why not? I mean, they're growing, no debt, good growth, and
It was probably Jody. She's probably
yes.
There it is. Rumor Alta Beauty moves up on renewed takeover chatter. So there's no details, just something traders are floating around. All right, perfect. Thank you for that, Jody. And Horace, how about you?
Okay, well, let's start. Just remember when no one was going to wear sneakers anymore. So we're going to start
Nike.
with Nike. November Kilo Echo.
New highs.
Wow. Just to take a look at this. So upgraded today to outperform somewhere. What a comeback from October of this year when people were projecting a lower. I don't think I can't take any more position in this, but I might start looking to sell off some of it, or at least start selling more aggressive calls to get out of this. We'll see if it comes back. And I was hoping that this would transfer over to Under Armour. Not that Under Armour is one of my stocks to watch, and it did to a certain extent, but nothing like this. But I do remember conversations in this forum back in October when people really were kind of swearing off of Nike. So I just wanted to bring that up in case it's fallen off of people's radar. So I'll be waiting for this to pull back and see if we can get involved again. This is one of these charts this year that just looks to me insane. This is what a move from 50 to 70 bucks in 3 months for a stock of this size. So that's my first one, just to pay attention to it. Secondly, I am going to dig into the earnings report for Kinder Morgan. So that's Kilo Mike India. I did have a trade on this, which I closed prior to earnings because it had exceeded my primary exit, and I simply didn't want to stay in it. So the story here is a dividend story. This is a dividend that's going from, I believe, 12.5 cents to 60. It's some ridiculous rise in their dividend. I think they're projecting 80% rise in their dividend. They reaffirmed that in this latest earnings call, and yet the market sold them off. So hopefully this falls some more, and I'll be able to enter the same kind of trade, which was an exploding bull put. On this one, looking for that, but I haven't read the earnings report yet, and so I'll hold off on that. And then finally, let's see, actually I'll do a couple because they're all the same theme. PayPal, so what is it, Papa Yankee, Papa Lima? This just continues to work, as does the whole payments theme, the death of cash. So if you look at MasterCard, if you look at Visa, we're getting up to that channel top, so maybe not now, but this is a theme that seems to be persisting. And one of the stocks that hasn't, probably for good reason, but hasn't participated quite as much as Square. So let's use that. So Sierra, Quebec. So if this kind of non-cash payment theme continues, I would look at Square as a potential to catch up to these three. So that would be my third one, I think. We'll just go with Sierra, Quebec. The financials are not nearly as good, but sometimes that doesn't matter when a sector gets hot. So you can put 4 in there, and those are mine for this coming week. So hopefully you'll do Apple, Charan, since none of us did, but maybe not.
No, I'm not doing Apple. I love Apple and I love their products, but I wish they split again. maybe, you know, just into 3, but it's getting a little pricey to own. And I mean, just $1 per share wise, obviously, they're not that expensive, but they're not cheap. More dividend, a little bit more IV. I think I'd be interested. So my first one is Mondelez. MDLZ is the ticker symbol. Let me put them in there before I forget what I used today. So Mondelez is everywhere. So it's a global snack company, from Oreos to all the things that kids eat. So Cadbury's major acquisition not that long ago, and so they have earnings coming up in February, first week, I think on the 6th, something like that. I'm in the money covered call. I got this stock a few weeks ago in the low 40s. It's done well. I've been basically just moving my calls up in this name. I like the fact that they don't have a lot of debt, that they pay a dividend, that the dividend payout ratio is very small, that they are generally slow moving. Like from November to now, they moved 10%. So it's not like many of the other stocks in the market. And yeah, I think there's room for dividend increases here over time. And just the average analyst thinks this stock is probably fair value closer to 50. And I've confirmed that at a few other places. So I think that this could continue to do well. And, I might roll calls, or I think I'm probably just going to go through earnings with a covered call on this one. So that's Mondelez coming up on the 6th. Also coming up on the 6th is a name that I've talked about before, and that is Tapestry. Used to be Coach, so I had 45 short calls. Clearly, that was not enough. I moved them up to 50. I don't think getting in at this price is really that good of an idea, but like a pullback, this would be a good name, because the August reaction, and I talked about this in September, October classes, that it seemed a little insane, that the stock reaction had been so negative off of the progress on Kate Spade. But if you're willing to be patient and you have a good business that is not overly levered, and this one isn't, I think they're gonna, and look at Michael Kors, they've done really, really well. So this one probably on a pullback. And remember, these guys had a lot of shorts after them, and they've all left. So I think this stock, look, I don't particularly need stocks to, go up a lot. They can go sideways or whatever, and you can make good money with them. So that's my second one. And my third one is very controversial given what has just happened in the last week. And my third one and last one is GE. So General Electric, the main problem that I see here is that they have a tremendous amount of debt, which they have been paying down. But they have a huge amount of debt. They have individual segments within, aviation is probably their crown jewel, and then we got obviously healthcare and so on. They cannot, I don't think this idea that's being floated around that they're gonna take GE and it will be no more, and it'll be just a 40% piece splits into aviation and a 30 some into healthcare and power. I don't think that's happening. I think what's going to happen is kind of like what they did with GE, with Baker Hughes or with Synchrony, where they kind of control shares and float out a separately traded unit. I think they're probably going to sell some more power assets, because even though power is doing energy, you look at the energy sector doing great, right? Great earning. GE power sector is doing really, really poorly. Gas turbines and things like that. And so they might divest of some of those things. This stock can continue to go down, but like the hit that they took this week, to me seems excessive. The most pessimistic analysts are 16 and 15 consecutively, and the stock is trading pretty close to that. Now, what I know is that with momentum and negative sentiment, a stock could trade well below the analyst, the most pessimistic analyst, which is 15 right now, and those numbers could be lowered. Those analysts have come. I did probably about 120 pages worth of printing on just GE in the last week, and just articles and opinions and math and spreadsheets. And I think this is going to become, in the next couple of years, something that has positive cash flow. They're going to have probably, organic free cash flow north of 7 billion even this year. And that a business like this will, I think, return to. The problems are like more of financial wizardry, somebody put it like that, that, the core assets are dominant in their industries, that the aviation, healthcare, and power, I mean, those are the bulk of the revenue and profits of the company. Those segments are doing great, especially aviation. They're going to be long-term secular growth coming out of that. So if the CEO can entangle, or maybe an activist gets involved, looks like there already is, I think it's going to be rough for 2, 3, 4 quarters. But I bought it for an investment. I own about half the position that I ultimately want to own. So if this one does slip to 15 or lower, and it might happen, because one of the black box things in here is GE Capital and how that's going to play out, because nobody knows what charges could come out of there, as we saw this week, and kind of take net income and profit margins down in the future. So there's a lot of controversy, and I think every time I've seen massive pessimism, usually ends up being a really, really good time to buy shares. And so Under Armour, I would not quite put in that type of category, but they had very massive negative sentiment just recently. Wells Fargo in August, September, nobody wanted these shares. Foot Locker, not that long ago, nobody wanted these shares. I don't think the story is as obvious as in some of those other names that I just mentioned, but I'm going to stick by GE for now and buy more and maybe hedge for earnings, which are coming up, by the way, next Wednesday. So, all right, that's my one. That's a long one, as I guess I was trying to fill time. Now I went a little bit over. All right, so thank you again for being here. Thank you so much to Jody for stepping in for Eric, who couldn't be here today. Last words, folks. How about you, Horace?
Yes, thanks, Jody. It's great to hear from you again. I want to reiterate that. And go Vikings. Those are my last words for this weekend. So have a good one.
All right. And Jody?
Just thanks for having me on. This was wonderful. It's a great community. Have your secondary exits and have a great weekend, everybody.
All right. With that, folks, thank you again for being here. Have a great weekend, and we'll see you tomorrow at the same next week at the same time. Bye-bye.